Hey everybody! In this video, I will guide you through the investment process and tell you about pitfalls that you can face in the future. 20 years is the age when you already need to think about your financial well-being. One way to succeed, become financially independent and earn your first big money is to start investing. At the initial stage, this does not require significant cash injections or any special knowledge. All you need is the desire and drive to succeed. How to start investing and how much can you earn? To start investing, it is not necessary to have a large startup capital. To get started, simply save and use a portion of your monthly income. First of all, it is necessary to determine the amount that you can start using without prejudice to yourself. As a rule, this is about 15% of your monthly income. It turns out that with minimal investment, a beginner in securities trading can start earning real money. At the same time, one should not forget that the accumulated amount will increase all the time, which means that the income from it will grow. Thus, by the age of 30, it is really possible to earn your first million on investments. And if you also invest in your development and education, then success is guaranteed. Step-by-step guide to becoming a young investor. Determine what percentage of income you can invest without compromising your quality of life. Choose the right broker. When choosing a brokerage company or a bank, you need to take into account many points: the cost of service. There are courses for beginners, the convenience of the application, the size of the commission, reputation in the market, and so on. Open a brokerage account. Fund your account. Select companies and buy securities for your portfolio. Periodically look into the application, compare the purchase with other similar promotions. Do not forget to read the relevant literature, follow the news from the world of finance, and engage in self-education. In a month, replenish the account again and buy securities, starting from the knowledge already gained. Subscribe to the channel and find out useful information about business every day. What not to do if you are new to the stock market. A private investor spoke about the principles that should be followed in order not to lose money. Be prepared for risk and loss, especially if you still intend to get those very hundreds of % of profitability. Do you want to earn a lot? No question, the futures market provides such opportunities. But be prepared for the fact that potential losses will also be high. Risking 1 ruble and at the same time earning hundreds of thousands is an utopia. If you succeed one day, then it will be rather luck, and it is unlikely that it will turn into a pattern. If you are not ready for big risks, choose more conservative papers. They will not have a cosmic income, but the probability of getting a big loss or even losing money is many times lower. Take the level of risk you can handle. You need to clearly decide for yourself what loss you are ready to accept, and move on if everything does not go according to plan. Forget robots and analysts. There is no magic pill, as well as universal trading methods. The market is not amenable to accurate statistics, there are living people behind it. In each specific situation, you will have to look for an individual solution. Do you know the difference between an experienced investor and an analyst? The former can not only find an interesting deal, but is also willing to take a real risk of losing his money. Analysts and robo-advisors are not responsible for their advice. It doesn't matter which path you choose, an investor or a trader, find your place in the market. In other words, you don't have to invest in everything. It is unrealistic to cover all financial instruments. Determine what your goals are and what you need to achieve. Think about what you are better at, what instruments you can trade best, and deal only with them. Develop your own strategy. Develop your market vision. Each person perceives the market in their own way. Different methods and approaches can be peeped from more experienced investors. But it is also not worth copying someone else's methodology. No one can 100% share their experience with you. You still, most likely, will not work out exactly the same. Therefore, you will fill the cones to achieve your goals. Get ready for difficulties. You have to work long and hard. If you think that after going through some short courses, you will immediately start earning quickly and a lot in the stock market, then you are deeply mistaken. You have to constantly study. One way or another, you need to keep track of what happens to your investments. Know where the business of the companies whose shares you own is heading. Thank you for watching this video. Stay tuned to watch our next videos and become a finance expert.